A huge problem in digital grocery that we haven't talked about yet is the profitability of digital grocery.
Hello, and welcome back to Invisible Capital. I'm your host, Lee Gibbs. In this season, we're diving into emerging technologies to explore how those technologies are being leveraged during the ongoing COVID-19 pandemic. Our first 3 episodes of the season focused on segments within health and wellness. Today, we're pivoting to food tech to take a look at how the pandemic has contributed to a drastic acceleration of e-commerce within the grocery industry, specifically the infrastructure side of digital grocery fulfillment. But first, let's take a look at the grocery landscape as it stands and the key impacts COVID-19 has had on food and grocery. To set the stage, we're welcoming self-proclaimed retail geek, Jason Goldberg. Well, welcome to the podcast, Jason.
Yeah, thrilled to be here.
Jason is the Chief Strategy Officer at the agency holding company Publicis Group, and is also co-host of the e-commerce podcast, The Jason and Scott Show.
To me, 2 of the biggest impacts of COVID specifically on the grocery industry is, number one, the shift in where consumers get their calories. So pre-COVID, you'd get about 60% of your calories in North America from a grocery store, and you'd get about 40% of your calories from a restaurant or on the go. And obviously, during COVID, most of us are getting more than 90% of our calories from a grocery store. So that has had all sorts of pronounced impacts on everything, like, both the demand and supply chain to those grocery stores and how the goods are sold and how people shop. At the same time, people are less comfortable going to grocery stores, and there's more health concerns about going to grocery stores. So we've had this huge acceleration of the amount of groceries that are sold digitally. So before COVID in the US, depending on how you counted, you might say there were 2 to 3% of all grocery sales happened online. At the peak of COVID, there might have been 35% of all grocery sales that happened online. It's kind of normalized down now in the teens, so maybe we call it 15% today. But that's a level of digital penetration in grocery that a lot of people forecasted might have happened by 2025 or even 2030, depending on whose forecast you look at. So you can kind of think of COVID as accelerating digital grocery shopping 5 or 10 years in the future overnight.
So we've seen this surging e-commerce demand that's really accelerated digital grocery adoption.
That was PitchBook's Alex Frederick.
I am a senior analyst on the emerging tech team focused on food tech and ag tech.
According to research firm Brick Meets Click, online grocery sales for home delivery and pickup reached $6.6 billion in May of 2020, an increase of 65% from $4 billion in March.
We've seen this massive consumer adoption that's really strained the existing infrastructure. So we've seen stock outages, we've seen IT crashes, apps crashing, we've seen wrong or damaged items sent, issues with consumers finding delivery windows, and really for new consumers who it's their first experience using these apps, it's been a challenging experience for them, which has turned some consumers away.
A huge impact of the demand shifting to digital is that very few grocers were prepared to manage that spike in volume. If you were a progressive digital retailer, let's say Walmart or Kroger, you had a grocery app before COVID, right? And in Walmart's case, like 25 million people use that app. And there's a whole team at Walmart whose whole job was to get more people to download that app. Well, good news. 75 million people downloaded that app in a week, right? So on the one hand, high five, like those people all made their KPI. On the other hand, oh no, all these new people are trying our digital grocery shopping experience for the first time, and it's the absolute worst version of this digital shopping experience we've ever offered, right? We don't have any delivery windows. We're completely out of toilet paper. You're likely to order peanut butter and get glue sticks delivered instead. You're certainly not going to get your first choice of brands. That guy's not going to show up when they promised, and they're going to be missing a bunch of the products. And that's all assuming that your technology doesn't just fall down and that the site doesn't throw a bunch of errors to the consumer because your IT department, wasn't prepared for that huge spike in volume. So, the first challenge all these retailers had is how do we scale our capacity and harden our system so that we give a reliable and good experience to those grocery shoppers.
In today's episode, we're going to try to answer that very question by taking a look at a few models of infrastructure that retailers and investors are betting on in the wake of a surge in online grocery. But before we get there, we need to understand what types of challenges these models are attempting to solve for.
So the two biggest challenges for online grocery are the cost to actually fulfilling the order and the cost to deliver the order.
Delivery for grocery is a unique challenge. For most of America, where we're more rural and the density between houses and the density of digital orders is much more Spartan, the delivery cost is really problematic. If you think about e-commerce deliveries for apparel, we use a system called a route-based delivery. And what that means is Amazon got 60 orders from different families that all want a sweater. We put all 60 orders on that UPS truck. That truck drives around the neighborhood for 4 hours and delivers 60 orders in one trip. And it's no big deal that some of those sweaters sat on the truck for 8 hours. When I'm delivering milk, I've got a couple problems. The milk can't sit in the truck for 8 hours, or I need a way more expensive truck that can keep the milk cold. And someone has to be home at the exact moment that I deliver the milk because it can't sit on my porch for 8 hours. So when we deliver perishable groceries, instead of being able to do a route, what we mostly have to do is a point delivery. That means load a specific customer's order on a truck, drive that truck straight to that consumer's home in a narrow window when we promise to be there and when someone's home to receive those groceries and put them in the fridge. And so what that means is the cost per delivery for perishable groceries is wildly higher than the cost per delivery for a sweater. And part of that cost is what we had to eat in digital grocery.
So scaling delivery for grocery is a challenge, but it's a challenge grocers are likely going to have to figure out. According to PitchBook, while online grocery sales currently represent just 2 to 4% of the total grocery market, it is expected to grow to 20% of total grocery retail by 2025, which has many in the industry planning ahead.
So one of the impacts there is that we've seen grocers respond by either investing in improving their infrastructure or with small and independent grocers investing in infrastructure much sooner than we would have seen otherwise.
Take us down to maybe the smaller scale, the mom and pop, the local grocers. How have they perhaps tried to pursue solutions in this time?
So before COVID, the largest three grocers in the United States, Walmart, Kroger, and Albertsons, probably represented about 40% of all grocery sales. When the supply chain issues started hitting all these grocery stores, the large chains with buying power and leverage over the suppliers were the disproportionate winners, right? Albertsons was going to get toilet paper before a mom and pop grocery store was going to get toilet paper from that supplier. And so, one of the really unfortunate impacts of COVID on the grocery industry is it likely put a bunch of independent grocers out of business and shifted their volume to the big established, more well-funded players. After COVID and after all these independents have closed and that volume has shifted, it's very likely that those same three grocers represent 62% of all grocery sales.
It's clear that the grocery giants are winning out, but some mid-sized retailers have managed to stay alive by partnering with an outsourced marketplace, like Instacart, for example, in order to remain competitive during the pandemic.
Instacart is a really interesting player in this whole ecosystem. When shoppers buy from Instacart, they create an account not with Walmart, but with Instacart, right? And if Walmart ever said, you know what, we're not going to use Instacart anymore, we're going to do this ourselves, the first thing Instacart would do is do an email blast to all the people that used to get their groceries from Instacart Walmart and say, hey, do you guys know about Instacart Costco? Big grocers, were waking up to the fact that Instacart was very helpful for this one stage of our growth, but as this is becoming meaningful, we should not be dependent on someone, right? And so the dramatic need for more digital grocery capacity during COVID has given Instacart a huge second life, right? Like a lot of retailers that maybe were moving away are suddenly like, man, I need the capacity. Let's get more of it from Instacart.
And that very response from retailers has contributed to Instacart's rapid growth in recent months. In June of 2020, the company raised a $325 million Series G and an additional $200 million Series H in October, putting them at a post-money valuation of $17.7 billion.
Over the past few years, we've seen traditional grocers really scramble to adapt to shifting consumer buying preferences and keep up with Amazon, Kroger, Target, and Walmart. So Instacart offers medium to large grocers, sophisticated ordering software, built-in courier pool, providing traditional grocers a low-lift and robust online grocery offering. So we believe that these outsourced marketplaces are more of a temporary measure to get grocers up and running in e-commerce.
While the Instacart model could help independent retailers stay afloat during the pandemic, the larger, more established players are taking a different approach.
As brick and mortar grocers turn on digital capabilities, the most obvious way to supply orders is from stock out of local grocery stores. It's located close to the consumer. There's very little setup costs, just need to pick and deliver. But there's several challenges to that. Customers are in-store competing with pickers, so it makes inventory management very challenging for fulfilling orders when the system doesn't know if an item will be on the shelf when the picker goes to pick it. And also, it adds store congestion, which harms the consumer experience. And the other issue is that it's inefficient for pickers. Brick and mortar layout is designed to have customers wander, discover new items, whereas pickers want to complete an order as quickly as possible. So there are several fulfillment strategies that are improving on fulfilling orders out of brick and mortar stores. Larger grocers are focused on investing in infrastructure to improve operational efficiency and reduce costs.
And one approach we're seeing many retailers take is investing in micro-fulfillment centers.
So micro-fulfillment centers, sometimes we call them MFCs, are automated product picking centers that are designed to support a small geographic area, like typically the same area that an individual grocery store might serve. You could think of, instead of putting all the products on shelves and having customers pick their own groceries, I would put all those groceries in individual bins in a automated picking system, and I would fulfill a grocery order by having a robot kind of pull all the products out of those bins.
So the benefits there, highly efficient packing, located close to consumers to allow pickup and reduced cost last mile delivery. But there's some challenges.
The typical micro-fulfillment center that's designed to live in the back of a grocery store or in the parking lot of a grocery store tend to be 5,000 to 10,000 square feet. So the thing to think about is, if I'm going to augment a store with automated picking capability, I'm going to add a micro-fulfillment center to that store. And the amount of space it takes is critical, because if it goes in the parking lot, I'm giving up parking spaces for it. If it goes in the back of store, I'm giving up shelves that formerly sold products to customers for it. So adding a micro-fulfillment capability to a live store, which is most commonly how micro-fulfillment centers are used right now, the space is a huge priority.
So depending on how much physical space is available, there's a lot for retailers to consider before investing in on-site micro-fulfillment. But for large retailers, space is less of a commodity.
Another model is a regional distribution model. Like, let's put the food in a much bigger, more automated warehouse that holds way more and expect people to drive further to do deliveries. The famous grocer in the US with that model is Kroger. So they partnered with a UK digital grocer called Ocado. And Ocado has this model where they use dedicated warehouses that they call sheds. Kroger's building 3 or 4 of these. They're each over 1 million square feet. So way huger. Instead of serving 10,000 families, they're intended to serve 100,000 families. And the thought is they can hold more stuff. They can be more efficient for the picking, but the delivery costs are going to be higher because you're going to have to drive the groceries further away. The micro-fulfillment center is they serve way less customers, but they can cost effectively be put way closer to the customer. So this is a great debate in efficiency. Is it better to have big things that are sparsely populated or little things that are densely populated?
Which brings us to another fulfillment trend we've seen from many retailers during the pandemic: dark stores.
What a dark store is it's a store designed for professional pickers instead of customers. So normally we invite customers to come in our stores. They walk up and down the aisles, they put all the products in their cart, they pay for them, and they drive them home. If that customer is going to have the groceries loaded in their car for a curbside pickup, or they're going to have the groceries delivered to their door, one way to do that is to have pickers competing with customers in the live store. And everyone listening to this has probably experienced that when they've gone shopping in Whole Foods and they're elbow to elbow with a bunch of Amazon employees that are picking orders for other customers, or maybe you went to another grocer that you were competing with Instacart pickers to grab that last bunch of bananas off the shelf. So what a dark store is it's a store that's not open to the public and exists solely to optimize picking for grocery delivery. And in many cases, it was once a live customer store that got converted for that purpose. And that's where the dark store metaphor comes from, is the store went dark. Today, a lot of dark stores might have been built from the ground up intentionally to be these local fulfillment hubs.
Amazon, Kroger, Giant Eagle, these are a few of the major grocers that have converted stores into dark stores during the pandemic. Dark stores are a good stopgap measure. It's something that grocers are able to turn on immediately and have local online grocery fulfillment centers, but they're typically not as automated and they're paying higher retail leasing costs. And we're seeing retail in decline and being replaced by e-commerce over the past decade. And so there is cheaper retail available, which might be providing retail space to dark stores at a lower rate.
Dark stores were already common pre-COVID, but during the pandemic, we've seen a number of retailers close down some of their existing consumer-facing locations in order to use them as dark stores.
One of the original dark store concepts was Amazon Fresh. They've had for several years 2 locations in Seattle where consumers could order online and then pick up curbside. And they've since began building out brick and mortar grocery facilities. They've also taken over leases from 2 grocery stores in New Jersey and converted them into dark stores. When the pandemic hit, we also saw Amazon converted a soon-to-be-open grocery store in LA. And they basically took this one store that was going to be an Amazon Fresh grocery store and made it into a dark store to fulfill Whole Foods orders for 4 different Whole Foods locations in LA. Amazon has also opened up a Whole Foods permanent dark store in Brooklyn to only service curbside pickup and delivery orders. Kroger, Giant Eagle, Stop & Shop have all converted stores from traditional brick and mortar grocery stores into dark stores during the pandemic.
As digital grocery fulfillment continues to be a challenge globally, we're seeing fully online grocery models attract investors' attention as well. According to PitchBook, the online food delivery platform Big Basket, who operates in India, has seen a flurry of VC activity in recent months. Not only did the company complete a $60 million round in April of 2020, led by Chinese retail giant Alibaba, but they're reportedly seeking a $375 million round of funding from Temasek Holdings, along with other undisclosed investors. And as of late October, are also in talks to be acquired by Tata Group for $1 billion. Another prominent example of investment in online grocery is the company Boxed, a wholesale online grocery platform that's been dubbed Costco for Millennials. In June of 2020, Boxed raised a $30 million Series E and is currently in talks to be acquired.
Boxed really sees itself as a wholesale retailer and almost like a digital-first Costco. They sell groceries and bulk household items. The groceries are primarily dry pantry items, which means lower food waste, less perishable and cold storage supply chain issues. However, Boxed does have this new express grocery business line that does handle perishable foods available in several select locations. So there's some benefits to the Boxed model over a Costco. There's no membership fees, and they really have a strong digital-first presence That means attractive pricing, free shipping, and a excellent consumer experience, which is very attractive for consumers who are used to buying goods online.
And Jason sees not just one solution, but a combination of these technologies and consumer offerings ultimately winning out.
What most grocers in America have discovered is that customers are willing to do their own delivery. And so that's a system we call curbside pickup. Both Walmart and Kroger have said it's the highest net promoter score shopping experience they've ever offered. Kroger has said that for every customer that wants a home delivery, 5 customers want curbside pickup. So for most of America, with our residential density, the scale solution for grocery really isn't home delivery. It's curbside pickup. That's the high volume play, and that solves the delivery problem. So if you're Walmart or Kroger, what you're saying is let's make picking more efficient by having automated picking, which is a micro-fulfillment center, and let's make delivery more efficient by having a great curbside pickup experience. And by bundling those two things, the premise is you can get the cost of digital grocery at parity or very close with the old self-service grocery, and now you can profitably serve all these customers that have become addicted to digital grocery. That's the combination of solutions. So that dark store is really helpful when we're doing home delivery. The dark store is not particularly helpful for curbside pickup. And so that's why the micro-fulfillment centers mostly aren't just designed to replace a dark store. They're designed to augment a real store. And that's why they take up parking space in the case of Walmart's model, or they take up shelf space in the case of Albertsons model.
With so much consumer demand for online ordering, operators in the food and grocery space are pushing to address this urgent need, while investors are increasingly looking to get in front of this quickly growing segment of the market.
Despite the pandemic and a slowdown in investment activity from the economic uncertainty, we're seeing high levels of investment focused in online grocery opportunities. Looking at online grocery sales, we're seeing adoption up significantly year over year. We're seeing active customers increase to 37 million in August, up from 16 million last year. Monthly sales have increased nearly fivefold to 5.7 billion, up from 1.2 billion last year. We're also finding that customers are spending more per trip. Average order size has increased to $95 in August, up from $72 last year. And the takeaway here is that online grocery is seeing massive growth, and we're seeing an acceleration of the adoption timelines, and online grocery is quickly becoming table stakes for larger grocers. In terms of VC activity, online grocery is one category in our larger category of food suppliers. And we're seeing that online grocery peaked in 2019 with 1.7 billion invested across 47 deals. And as of 3Q 2020, we've seen 1.3 billion invested across 34 deals.
It sounds like as the industry continues to evolve or continues to try to find how this solution gets refined, it will be ripe for additional investment and additional acquisitions by a lot of these incumbents that are actively trying to put these solutions in place right now. Is that a fair assessment?
It's a very fair assessment. There's a ton of unknowns around the future of shopping and the long-term impact of COVID. But what's for sure is COVID's not going to magically go away and shopping's not going to revert to exactly how it was before. Like those extra 50 million people that downloaded the Walmart grocery app are going to keep using the Walmart grocery app. And people that magically had toilet paper show up on their door and didn't have to go to the store aren't going to suddenly go, the most enjoyable thing I can do today is go get toilet paper, right? And so a lot of those forced trials are going to be permanent digital shoppers. And so that means all of our job is to figure out how to make the unit economics work for that. And none of the answers are completely apparent. And the answer is probably some blend of all of these things. The exact ratio of that blend probably is going to vary wildly. It's going to be different in New York City for Fresh Direct than it's going to be for Hy-Vee in Iowa or H-E-B in Texas, or Walmart, is probably going to have very different solutions across all the markets that Walmart plays in. But for sure, they're going to have to make significant investments to retool the entire chain of customer experience to accommodate this new realities of consumer behavior. And so there are going to be an opportunity for a lot of vendors to sell in those new solutions.
The development of the online food and grocery space has been rapidly accelerated by changes brought on by COVID-19. In order for players in this arena to build out the necessary infrastructure to meet this growing demand, they're going to have to make some major investments. Whatever solution or combination of solutions becomes standard, getting there is going to take a lot of work and a lot of capital. As you can probably tell, we covered a lot with Jason, more than we could fit into this episode. So before we continue on to our upcoming discussion on ghost kitchens and restaurant delivery tech, we'll be publishing an extended interview with Jason next week to explore a bit more of this fascinating grocery landscape. A big thanks to our guests Jason Goldberg and Alex Frederick.
Invisible Capital is a production of PitchBook. Executive produced by Kai Yao and Adley Bowden, hosted by Lee Gibbs. This episode was produced and edited by Jen Germain. Audio mix and additional production support by Kai Yao and Allison Sharoni. Cover art by Landon Early. Subscribe to Invisible Capital on Spotify, Apple Podcasts, Stitcher, or wherever you get your podcasts. For more information, visit pitchbook.com/podcast.